our goal here is not to say that anyone else is doing something wrong. Our goal is to say, reset some expectations to what is often promised, to what is a reality, to talk a little bit more about what Massive Capital does in terms of our mentoring program. So again, I want to make sure that we're doing this. Massive Capital sets up themselves, and we made a goal from the very beginning that we wanted to create a community. We wanted to create a community where people could learn and grow. So in that community, we provide a lot of free information, but we also do have a paid mentoring program. We haven't talked about it a lot. Tonight, we're going to talk a little bit about it. The next couple of sessions, we're going to do some study cases around it. But I just wanted to make sure that I was clear with our intent tonight. And obviously, we always have a discussion afterwards with Q&A. So if you have any questions, feel free to ask questions. Shirar is going to be doing a lot of the talking when we get to it. He's phoning in, as I mentioned before, but we're able to get going. So if you want to start sharing the screen, Jasmine, we will get going.
All right, let's get it started. There you go. Can you see
Awesome.
my screen now?
So again, welcome to Massive Capital's educational session. Tonight is a case study. We'll go to the next slide. So I think that's a picture of me on the left. I'm not quite sure. I've been putting on a few pounds this fall, so I got to get to the gym. But everybody should have an entrepreneurial spirit, but not everybody should be an entrepreneur. How many of you feel like that little guy going to get the world, right? How many of you feel that? I know there are many days that I feel my opponent, the things I've got to conquer, the things that I've got to do are way bigger than me. But sheer tenacity, you know, we keep moving forward, keep doing things. So it's a great intro. So we're going to talk a little bit about who is Massive Capital, partnering with Massive Capital. We're talking about our 2024 planning series, and this one is understanding the pitch that you're given versus the reality, and then we'll have time for Q&A afterwards. So we are super excited that we are doing our first in-person event in Dallas, Texas. It is going to be on February, don't even know that I got the dates here. Sorry, February the 15th to 17th. So we're going to talk about love there because we're so close to the 14th that we all love real estate. So I put a link for you to be able to sign up on it. And if you put the code webinar, all caps, you will get $100 off. There are different ticket levels that you can get, but we're super excited. We've got a really good agenda. You can also scan this QR code. We're very excited about our first in-person event. As many of you know, we've done 2 virtual events, and our goal was to do this one after we warmed up on providing some extra education. But we have a lot of topics. We'll have a lot of networking. We're going to try to, again, be unique how we offer this in-person event. So we hope that everybody can join us. Awesome. So a little bit about Massive Capital. We're a vertically integrated real estate company. Massive Capital specializes in ground-up construction, retail, flex space, industrial, and mixed-use multifamily. Over on the left, we're in equity. We're in brokerage on triple net retail and development type things. We're also in property management. Again, triple net commercial real estate. We are not in the multifamily property management. We do development, construction of both metal, which is mostly what you're going to see on the retail type development. And we're getting into the construction, which is wood, which would be housing, other types of structures. And then, of course, we have our education program. So we're merging, as has been mentioned a few times before, with Realty One. Realty One is a real estate development company. They mostly build retail centers, lifestyle centers. They have about 290 million annum under management. A massive capital itself, we have X-Base project, we have our land acquisition project, and about 1,346 apartment units for a total of 175 million. You'll see the map up at the top right. There are current markets where we're in, so we're obviously very Texas focused because most of us are located here, but we're in North Carolina, Georgia, and Denver. And we're looking in the Phoenix and Tampa market, but in the Phoenix and Tampa market, we're more considering our triple net developments for there. We're not at this moment in time looking for multifamily in those two markets. Doesn't mean we won't be in the future. So, but that's a little bit about who we are. Next one, Jasmine. There we go. So you can see we've got a pretty big team behind us. Most of the top row are folks that you might deal with on a regular basis. And then we get into the second row, there are some massive capital folks there, and there's a lot of Realty One folks there. So we have behind every project, we have somebody who's taking care of everything. So we have a full accounting department, we have a full brokerage, we have a full leasing team, we have a construction team with all the construction managers. And then we have a finance department. I think I mentioned that one, sorry. And then we have the contractors. So we are the general contractor through Realty One. And then we hire out third-party vendors to be able to build the products that we're building. Next slide. So these are the principals. So on the left, you have Shirar and Sanjay, who you've got to know. And then Mike, I don't know how they put Mike over there. I always got to add him in because he's kind of the massive guys. And then we're under with Realty One, we have Bo, Alexis, and Pat. So once we vertically integrate, we'll be operated by these 6 partners. And each one of them have different verticals in our company group that we're responsible for. All right, a little bit about current activities. So we're going to start at the bottom on number 11. So we closed on the land on a new development in Austin. So that's 10 acres. Our goal is to put townhome development on it. We closed Amberwood Apartments in Dallas. We closed Warner Robins in Georgia. We've raised capital for X-Base Houston. We're about to start development early next year. We closed on a deal in Denver. We did a triple net lease property in Conroe, Texas, another new development in Katy, Texas. We just closed actually 2 weeks ago on our second deal in the North Carolina market. Somewhere in there, we slipped in 10 acres in Houston. I didn't even know about it till it closed. That gives you an idea how quick Massive can work. I'm on a call, they say, oh, by the way. And so the goal with that is hopefully it will be up for future development, but it was a deal that just made sense. We have an opportunity on our value add in San Antonio. This one is switching. We didn't quite get switched by this webinar to a 506C, but we will be. And our next webinar for that is next Thursday. So keep your eyes out for that if you're an accredited investor. And then we're just finishing. So we just closed on the property. We're about to close on the property here in Austin. And we're building a 16,800 square foot retail development. There is still a little bit of room. If you're interested in investing in that project, you would talk to Jasmine, Maria, or myself, and we'd be able to get you in there. And if you're interested in a higher dollar value, we would discuss a bonus offer that we have. But that one is closed. All the permits are in place. We're going to start construction in January. It's an awesome project, 20 minutes from my house. So I'll get to go take pictures of it as it gets built. I'm very excited. It's the first time I've done a new build retail, so I'm very excited. Awesome. So new construction. So if you have land, and I'm going to clarify land in a location. So we are not looking for land in the desert. We're not looking for land in the mountains. We're looking for land in major metropolitan areas. So if you have land and you'd like to bring the land to a deal with Massive Capital, you can joint venture with us and we would be able to take care of the construction for you. Next one, Jasmine. Well, let me just pop two in the chat. If you do have a deal, any deal, including the land and anything else that you'd like, you need to be able to send us the full underwriting and different things, but you send it to deals at Massive Capital. So multifamily, we sponsor projects that have heavy capex, so we're not afraid of a value add project. We work on the asset management side. We co-GP and we bring a lot of expertise to the group. We are always looking for groups that have solid boots on the ground. We believe that's a huge part of our success, to be able to have a local operator that's boots on the ground, really understands it. And then we are for credit enhancement. So all of the deals that we've been in, Massive Capital has provided the expertise and the balance sheet to be able to sign on the loans. And education. So this month, we're going to focus a little bit about it, hoping to get you prepared for 2024. It's hard to believe it's 2024. By the way, while we're talking about December, for those of you that don't know, the last day of December is 1, 2, 3, 1, 2, 3. Think about that. 1, 2, 3, 1, 2, 3. So that's pretty cool. But we'll put a couple of links in here for our education program. And at the end of this call, we're going to have an opportunity. If people want to do a little breakout room to learn a little more, we can do it. And then we'll do continue with the regular breakout room here. So I think we're ready to put our seatbelts on. All right. Are you ready, Sharar?
Man, you're putting me in a hot seat today. Well, let's go. It's fun time, right? Yeah, I'm ready. We go to the next slide. I really appreciate it. Everybody, bear with me for a little bit. So I always look at, those fancy videos, that Instagram post, Instagram versus reality, right? So I thought I'll talk to from that framework. So these are some of the 7 things that when we talked about within a team that we see the conventional pitch, right? We go to a 3-day courses, and then all of a sudden, we have $1 million in our bank account, right? Or somebody may perceive it that way. Now, again, before I get started, as you guys know, the whole idea, this is educational purposes only. Our goal is to take a shot at the conventional way of pitching it that we hear from the news and give you a framework to think one more layer deeper, right? So whole idea is it's about introducing the thoughts so you can think it through a little bit more and get a complete 360 view, at least a better view of the business, of the property, of joining a community. Then make a decision, whatever it is, right? Every decision to us will be a good decision for somebody who's making it. And our role is to give you guys framework so you can think a little bit more and make a better decision as you kind of go through, right? Just like investments, all investments, we have risks. Same thing, every single platform has its own quirks and own benefits. So you look at it, you study, then you make a conscious choice who you want to go to. So going back to do what Trevor started, we believe every community has a way to add value in everybody's life. But for us to join the community, we have to really observe who they are, what they do, and how they go about it. From Massive side, we took a position early on. We are not a dedicated community. We work with everybody. So we kind of float on top of other platforms that we have. And we're a little bit more technical, academic than a conventional community. So that was our approach. From that perspective, we'll talk about a typical ads that you may see or may hear, and I'll go through those 7 of them. Then we'll come back and kind of show you a little bit more how that kind of goes about. So, those 3-day courses, all of a sudden we get the rah-rah, we got the mindset changed, and all of a sudden we go start, make a 180-degree, or I bet the solid 90-degree turn, and we go and get into something, right? So that's one. And then the conventional way. Now, caveat, when market is great, it was proven up, all of our mistakes went away. So that statement made sense 2019, 2018, going into 2020, but it may not make sense now, right? So conventional way will be like, hey, find a deal, money will follow. Then create your own database, get your email templates, then it will go, right? I don't know how many thousands email I get, and I am yet to talk to more than half of them, right? And when you go to the webinars and outside, all of a sudden what they do, they have a pen and pencil ready. The moment you got a heartbeat, boom, you go into somebody's database, but there is no communication whatsoever. All of a sudden you're 506B, right? Potential issue. Number 4, call a broker, send them a buy box, and ask them to, send their best deals. When was the last time we took somebody out we really like on the first time, right? It takes time to build a relationship. Then you'll see some of the communities will say call, direct mail, property owners. and that kind of stuff, right? And then number 6, it's that what gets me the most, right? That once you become a real estate professional, all of a sudden we don't pay any taxes. Then number 7, once you get your first deal, that's it, it's done. We're buying our next jet, right? So again, we'll have a joke at it, we'll kind of have fun with it, then we'll kind of go, right? So, and all of us, 100% of the Massive Capital team, we belong to multiple communities. We love those communities. We like the way we do it. But sometimes when you narrow down and make a statement, make sure you take those statements, think it through. And our whole idea, going back again, pay attention to what we say, what everybody else says, but pay more attention to why they say what they said and what the staging looks like, right? I always, I'll give you a joke. If you go to the next slide, one of my good friends, he is one of the best I've seen on the multifamily side of it. When I started Massive, he showed me his equity raising. So last year he raised $56 million, one person, all by himself, from about right around 300 some early low to 300, investors all by himself. And then he added the caveat. Then I was like, look, this is fantastic. Maybe I can do it. Then he took a pause and he said, look, it took me 7 years to get to that spot, and you're in year 0. So don't forget. So point is, when you look at somebody else's success, look at it, but take a look at it, how much of a time they spend, what the journey they have been through, because we all have to go through that version of it. Now, as we talk about it, we wanted to talk about a little bit more why we say what we say. One of the things that we have from the Massive, everybody got opinion, right? Whenever you get sick, everybody becomes a doctor. But then we really got to understand who the true doctors are. For us, we'll give you the version that we see, version that we experience, and then take it from there, right? So I took the screenshots on the top. It's our dashboard, live data. So I've done 15 deals last 2 years. We raised about $42 million. And as you know, 340 investors in our database. And, we kicked back almost $1 million. So that's one. So when someone says we raise equity, this team right here, the investor relations team, they went through 15 deals. It takes lifetime for a lot of people to do 15 deals. Our team has done it in 2 years. And we have done different kind of deals. So we know some of the quirks of it.
Hang on.
Right.
Uh,
And
yeah,
somebody's talking, sorry.
yeah, okay.
Go on mute. And the second thing, what we saw, this is the screenshot from our tracker. We underwrote in last 24 months about 592 properties. That's a hell lot of properties. Kudos to the team, all of our partners, that many of those. And you could see 2022 was our beginning of it. We put the system and the process structure together, and then we jumped really quite a bit. We have done a little over 400 properties we underwrote. Then the columns are different type. If you go to far left, about 500 and 468 of them are multifamilies. Then we have done across the asset classes. So we are building muscle as you kind of go through. And what happens when you see those deals over and over and over and over, you start picking up a version to it, right? We always say Houston is not same as Austin, not same as Dallas. Austin may not be the same as Dallas, but they're very similar to maybe Denver. And Denver may not behave the same way in Dallas, but they mimic a version of Carolinas. Carolinas is different than Georgia. So every city has their own style. Every location of the city got their own style. Every asset class got their own style. But things that we'll talk about here are based on that perspective. And then, based on underwriting 600 properties, based on 44, $42 million raise. Now I'll go back to the slide before, and then we'll talk about what we see, what we hear, and then what really plays out, right? Okay. So one thing to understand as you get into it, all success will lead to real estate. We're in a real estate conferences, some way, shape, or form. Somebody could be rocket scientist, neurosurgeon, best in the class, CEO, some way, shape, or form that real estate shows up. So there's a kernel of truth, and truth is real. As we grow, as we become successful, path is gonna lead into real estate. It just happens, right? And then the question is where we are and what the path would look like. So I took that first thing that we talked about it, then I recategorized a little bit. I like data, I like grouping. So the first thing I said, look, lifestyle, 1 and 2, then capital raising, then acquisition, then passive investments. In this forum here, we have folks who are looking to change lifestyle, or we are focusing on capital raising, or we have folks here that want to do asset management, we're underwriting, and then we have our team members here, they're investing with us, right? So I thought I'll regroup it. Before I go to this second section of it, I'll give a story. I'll open up myself a little bit. So I came into real estate, I came into the apartment. Let me go back. About 2017, 2018, I flipped 6 apartments to contracts because I have a wholesale business that I own that buys only for me. And statistically, working from Shell, I see some macroeconomic data. We thought we were in a recession in 2019. And feds are protecting us across the globe. All the monetary policy was quantitative easing, was for real. They're just kicking the can down the road just to put the recession there. So at 2019, we make a decision, no more multifamily. Let the system break. I was wrong. 2020 kicked in, game changed. 2022, in between, we're successful. Me, Ajit, Sanjay, Mike, and I was running Shell refinery, half of the refinery from the finance side. Think about our revenue is $9 billion, right? So my head was like, we run a CFO perspective, a business finance manager, I'm running a $9 billion asset, 1,600 people. I have a good idea how to run a multifamily, which is only $19 million. Here comes the Pasadena first thing we bought. But what I forgot is that even though I know the process, I know the structure, I know the strategy, I don't have domain expertise. So it is real. So when you hear somebody, I've been a manager, I've been a this and this and that, there's always a price we pay on the domain expertise. And the gap of the domain expertise was Sanjay. So if I would have done the deal by myself, even though me and Ajit were the largest LPs, we found the deal, numbers make sense, everything else, but domain expertise is real. So when you make a switch from a single family to multifamily, it's not the same. It will never be the same. Just because I flipped 10 houses, it does not mean that I can run a 200 unit assets. Not the first go around, right? So the reason I said that, look at it, our goal is to identify gaps and mitigate that. Having said that, if you go to lifestyle, so if you click one more time, I had a laugh at it when I typed up this one. So if you click one more time, it's going to show up the other half. Jasmine. Thank you. So the reality, right? The lifestyle is real estate has been an enabler for all of us, and it'll be for you as well. That is real. I mean, no doubt about it. Single family gets you the confidence, multifamily gets you ahead, or in general commercial, right? And then, but it's going to require time and persistent. Without those two, it's not going to work. It is not a get rich quick scheme. It just hasn't been it. From when we look at a portfolio, we break the performance 2 ways: individual company performance and market performance. When the folks who said, I give you billion percent IRR 2019, 2020, 70, 80% of the performance happened just because we're lucky. And 10, 20% happened because we're good. So I always say it takes time and persistence. Go for the ones and twos. When we get a gift, we take the gift and we run with it. But we don't go for the gift and make it a business plan. It's going to take time. Biggest key point, when you own a piece of property from the LP perspective, a GP perspective, when there is an exit, that's where the big, beautiful thing happens. It takes 5 years to get there. 3 years if you're lucky, right? 2 years is market swapped out. So it takes time. But by the time you get to year number 5 or 6, when the first one goes out, you invest in 10 of them, then the beautiful rain happens, right? So it is real. Real estate changes life, and it's going to do it for a lot of folks, but it's going to be time. Number 2, after first deal, never have to work again. It's absolutely not right. It's never been the first deal. It's many, and it's so built up. Like Trevor, he has done more than 32 LP, if I'm not making a mistake. I have done over 20. Sanjay has done over 30. Mike has done over 30. All of our team, we have done over 70, 80 deals put together, and it's never been the one deal. And as an LP, same thing. It's not going to be one and done. You continuously investing, and your goal is to become a professional limited partner. So you know a good deal, you know a good partner, you know a good location, and you kind of go with it, right? But it's a slow buildup. Capital raising on the left-hand side. If you find a deal, money will follow. When money was free, crypto was $72,000. Yeah, it was free. You don't know what to do with it, right? I have friends who sold their Radio Shack stock make $2 million. She walked out. She absolutely didn't know what to do with it. She was like, Shariah, let me buy some of your houses. I just need to park it. But that's a luck, right? So it's not true that when you have a deal, money will follow. Always remember, owners of the money attract the other owners of the money. I don't know how else to say it, right? So think about this way. If you work as a corporate location, you are a VP, you're hanging out with other VPs, right? If you're a manager, you're hanging out with other managers. You're a CEO, you're hanging out with other CEOs. Now, if we want to switch, which is perfectly fine, but there's a strategy. So when someone says, I had my first deal, I raised $20 million. A good friend of mine, her first deal she has done, it was a $27 million deal. First deal coming out the door. And she raised about $13 million from all of her friends. Think about it. Almost $30 million deal, first time. She led it, she underwrote it, she led it, she delivered that, and she raised all by herself. Then the question is that the norm? The answer is no. She was a partner with one of the top 4 consulting companies in the world. She knows other partners who have a lot of money. A couple of phone calls, money showed up. That's not the same case for me. That may not be the same case for you. And that's never been the case where just because you got a deal, money will follow. 1 time, 2 time, but it's not business plan. So always remember, owners of the money will attract the owners of the money, but sometimes successful people will follow the other success. Yes, when we start, a lot of people gave us confidence, a lot of people gave us opportunities, right? That's also because some way, shape, or form, we, or all of us, we have to say, look, I have been successful somewhere else. Even though I'm new into this game, that success will flow into or propagate into this domain as well. So that's there. Then the capital raising, as you can see, a lot of people pitch the raise the CRM process. To us, CRM and process, it's a baseline expectation. If someone into the game of raising money, it's just like someone wants to go get a job, you know how to write. Same thing, CRM and a process and a template, that is a baseline stuff. Especially if someone is young, haven't done much of a deal, you're raising fund, or you hear somebody who's, first time doing a fund without any real estate investment, something like that. Remember, fund managers, they have fiduciary duty. That's a typo. No, it's a fiduciary duty, and your exposure, and you have a huge exposure to the SEC regulation. We always look at our team. We raise quite a bit. We do 5 or 6 Bs and Cs, and it takes $35 to get a lawsuit, right? So we got to make sure that when we come into the game and raising capital, we follow the rules as much as we can, and we stay close, right? So when something were to happen, we can say, look, this is a slippage, this is a mistake, we have a process in place, we have everything is in place. Like for us, we do everything on our platform. We track every single text, we track every single call that goes out. So, hey, something were to happen, hey, I'm a 506 B or C, we have data to prove, right? And if you're a capital raiser, pay attention to that as you go through. Especially all the foreclosures coming up, you'll see a lot of lawsuits, and you can know a couple of the 2 or 3 big ones. So prepare, make sure you're staying with the SEC regulations, know your attorneys, make sure they know how to litigate, make sure you vet them out, then you go do it. If you don't, that's fine. Find a team who's doing it for you and a bolt on. Acquisition, number 5. Remember, look, brokers are being brokers. They're judging you and judging me to get the most out of you and me. And it's their job. They get paid by the sellers, right? They are good friends. They will give us a little bit more flexibility once we made them money. That means once we did a couple of transactions with them, we built the confidence. But the first time around, they are judging every single email, every single tone, every single conversation. That's their job, right? We are new, we come into the game, but brokers, those brokers have been there for 15, 20 years. They know someone who is emotionally excited, someone who wants to push the boundaries, and someone who wants to take the most amount of risk. And they give the properties usually to them, especially the early ons, right? That's their job though. So be clear about in your mind as you go, how they're going about it. And again, they're doing their best and they're doing what they're supposed to, right? I always say there are 3 kinds of brokers. Ones are deal makers. They know how to play the game. When they don't have the time, or market is doing good, they don't give you much of a time, but they'll tell you. And when the market's slow like this, they're gonna turn back around and be a good friend. So they want to make sure that they do their best and they're open about it. Those are one of the best kind of brokers you can find. stick around with them. The second category of broker, they're pretty level-headed. For them, a deal is a deal. Relationship later, after you knock out 2, 3, 4 deals. Those brokers, pay attention to them, work with them, and stay close to them. There's another kind of brokers, they don't really care. They're like a devil's whisperer. They're gonna come back out, cheat you, they will talk to you in a very demeaning way, and they will make sure that they put you in a very defensive mode and get the most out of you. You know who they are, I know who they are, avoid them like a plague, let them know. Case study, I was young, right? You know, my third asset, went to San Antonio, talked with the big boy broker. He came at a very, like, I tell you something else. If you don't do it, you're not gonna get it. If you don't listen to me, I will stamp you for the rest of your life. He played that like that. We took it, we terminated the contract. I went to the CEO of the company, dropped an email, had a conversation, and we left it at that. So if you do not get treated well, speak up. Don't be defensive. We have seen so many times, broker do not treat you right. You make sure that you always have, you hold your ground right, make sure they talk to you nicely, especially the new ones, and you earn the respect as you go, right? Last one, number 6, acquisition. Look, you'll see some of the other platform that says send out mailers, send out this and that, call the cold callers. It's true. I have a residential company, you know, we do 50, 60 transactions a year. We do about 100, about 1 million texts, 500,000 phone numbers, 250,000 mailers. It works on residential because you got 20 billion properties, right? But that's not the case for multifamily. That's not the case for sophisticated market like Texas. If you go to Oklahoma, if you go to Ohio, if you go to Louisiana, Mississippi, Missouri, that may work because it's not crowded. But usually you're not going to find good deals directly talking to the broker. It's very unlikely beyond maybe once in a 2 or 3 years, something like that. It's a story time. It's a good story for the wholesalers. It's not a repeating business. So if you want to grow as a business, just play it out that way. Or everybody who started that way, they have to stop it because they could not grow that way. Last one, passive income. Like if somebody's a real estate professional, everything will be great. No, never pay taxes again. That's not true. The right idea is that we pay taxes when we choose to, and the taxes, we have to pay the taxes. It's just later down the way, right? So there's a lot more to it. It is true. If I'm a real estate professional, which I am, all of us are, that opens up the door for doing a tax deferral, but it's not true that I never paid the taxes, right? So that's a good way to say, look, it is a very good segment. Everybody's portfolio should have real estate. All of us, we should be active in the real estate, either from the passive perspective or healthcare perspective. But as you look at it, understand it's a slow journey, it's a long journey, but it's a fun journey if you can pick the right set of team to go with it. The beautiful thing about real estate is, and the corporates I want to work, it's a pyramid, right? The more you go up, alone you have to play, and more people you have to leave behind. In the real estate, it's the other way around. The longer we play solo, the slower, even less likely we're going to go up even more in the food chain, right? It's an upside down pyramid, and that's real. It's all of us. We have grown by the partnership, and you should do the same. And I would say folks should try to do most of the stuff all by themselves. You know, the rate of return is better, but the journey is pretty slow. And, you know, the time it takes to get to a meaningful size, it's very long as well, right? Unless you come from some other business, you sold everything, come back and build a business, that's a different case. But usually speaking, you know, it's a fun journey, but it's a long journey. And our request is when you join a platform, look at it, get their strength, you know, and then you see how do you fit into that community, then go join. One of our mandate from the massive side that we took a very early position last year that we are going to partner with people only if they come from, only if when they come from a paid organization. Because it helps. It's almost like going to, you know, your alma maters, right? Someone come from a school that you went to, automatically you connect because you have a built-in trust into them. You have a built-in expectation from them. So our goal is to, hey, I gave you some, our reflection on it. This is how we see it. And all of us, all of our team, we're day in, day out real estate. That's what we do. That's our lifestyle. We love it. It changed us. And we're seeing some of the friends who are hanging out with us, it's changing them. And it will change for you if you do the right thing. But be active about it, right? So long way of saying, play the game. Don't be on the sideline. As you know, when you play the game, sometimes you'll slip, sometimes you'll fall down, but play the game. If you don't play, you're going to miss out. That was a lot. So I'll stop. It's Trevor, I'll pass it on to you, and we can take it from here. Oh, well, yeah, sorry, I got one more thing. Sorry. Here you go. Thank you. So just to kind of land it, right? We talked about what we have done 2 slides ago about the raising and the closing and all the deals. And then we talked about some of the pitches that we do, and then we'll give you the structure, how we follow, right? Me and Massive, we'd like to tell ourselves we're a little more academic. We run everything on a process. As the process breaks, we optimize the business as you kind of go through. So when you are an LP investor or you are in GP, right? You're an LP or GP, whatever it is, you have an equation that you need to build for you, and you kind of go. So I'm giving you a little bit more back end how we manage for the GP, so folks we want to be GP with. And for us, strategy first, plan second, development performance right by follow. If you take a look at the bottom on the top right, business planning, right? Everybody should treat them as a business owner. You should have a business plan, market selection, then how you're gonna do the legal entities. Then we should have investor package. Then as you can see, the asset package and a team profile. That should be done before we put anything under contract. Think about playing the games, right? We're gonna build a winning game. Are we gonna build a winning game when we're into the game? We don't know who's in the office, on the defense, and everything else. Or should we build the team before the deal? Practice, practice, practice. So when a deal happens, everybody knows where to go, right? The top end is that. Right underneath is the practice time. In a team, it's the SEC attorney, it's the entity, the corporate insurance, it's the CPA, it's the property management and the brokerage and the title, and also good inspection. Like, imagine we go 45 day due diligence. I'm buying from here to, I'll give you Ohio that I don't have assets, and I got to figure out everything. It takes time. You want to figure out, but less off, right? So we have that set up, and we like to stay around with people that we are doing deal with. They could be expensive, they could be tough to get a hold of, but the more and more we work with them, the better red carpet that we get, right? So that should be you as well. That's the team development, and in the middle is at the very end is the performance, right? So we found the deal, we underwrote it, and then here we are, right? What happens? That's what happens. Take a look at the left-hand side. It's deal, valuation, LOI, that side. On the right side, you got investors, identify, quantify, talk to them, make them an offer, they commit, they come into the closing, right? Underneath it, and as you can see, once you get the assets, once you close it, you got to sell it at some point. Up until you sell it, we got to make sure with the quarterly cash flow and the principal return kind of cycles up on the right side. On the left-hand side, once you do the closing, it kicks into the operation. We make sure the liquidity is in place, then we exit and we kick on the deal, right? As a business owner, this is what you run all the time. Now imagine you do a deal once a year. 12 months is the light years in real estate, right? You got to go back and relearn all of them. Now imagine you do a deal with a brand new set of team every single time. You got to deal with this every single time. So repetition matters. And for us, we want to do less stuff, right? As less as we can do, better it is. So on the top line and the model line is pretty steady for us. For us, anyone we have done deals together, it takes about 2 to 3 months, because to us, any investment, it's a job. It is a job, right? It's a job for 5 years, whoever runs the asset or whoever raises the equity. So we walk them through, we vet them through, we interview them, they interview us, we role play, we practice, then we go deals together. We get a lot of phone calls that, hey, Shreya, I just have to, or Mike, we get phone calls. Hey, we just put the property under contract. Can we come do a KP? Our answer is no, because we don't know the property. We can get there in a week. We don't know the market. We can get there in a week. And we really don't know the team. That takes months for us. So if someone calls us that, hey, we have a property, come to the deal, and we got the property under contract. If we don't have a pre-existing relationship with the whole team, we don't know their operations, their mindset, the framework, their capacity, their availability, then it takes too much. It doesn't work. So I would say a dominant chunk of our deals that we don't do is mostly because of the team, right? And you want to make sure that if you're W2, you're hanging out with non-W2, because you don't do one deal, you do many deals. And when you stack up 4 or 5 deals together, it's a full-time commitment. And if I am W2, I'm working 60 hours somewhere else, 40 plus my drive time. How do I give 10, 20, 30 more hours on a daytime when my property management company needs it? So it's an interesting place. So do it, but do it the right set of team, right? And especially who knows a little bit more, so you can mitigate your risk. So this is how we run our business. This is how we do it. This is a little bit high level version of it, and this is how we take our students with us, right? And if someone shows up in our team and we're doing a deal together, the top line, they don't have to think much. They just have to follow. It's there. The team development, a good chunk of the team is there. We go to set, same attorney, they know our docs. Our CPA knows what the SEC writes. Then, our SEC attorney knows what CPA writes. They know how to form the entity. Our, brokerage team knows us. Title team knows us. That changes. Then inspection, we have a process. So I have a checklist for most of the thing. And, it's less of a learning, more of a doing. Then on the performance side, it's when we say it, that everybody thinks they know P&L, that's not true. Everybody believes you can run asset, that's absolutely not true. And when you stack both of them, it becomes really critical. With one asset, we can get away. When you have 2, 3, 4, 5 assets, you need to be on top of the data, you need to manage the data, you need to cut the data. It is extremely important to make sure that the players we are partnering and they're teaming up with, they know the game. It was a journey for us. We almost participated. We just finished our own asset management software that we use. It took us quite a bit to get there. Now, every deal that we do, we refresh our own data set directly from the system, whatever system that you have, Entrata, Resman, or Appfolio. Our software sits on top of that. We extract data, we aggregate data our own ways. We have a dedicated finance manager. We cut the data for us independently. So when they come in as an asset manager, talking to our partners, we're talking at the partner level, and we know the asset performance without them telling us how the asset performance is. It's a check and balance. When you go to the property management calls, we are running the data at the same time they're running it, but independently. We're using a different KPIs than they are. So when the property manager shows up, it's not that first time they're telling me something. We do 2 types of conversation. We do backward looking. What happened last month? What happened this month? That's usually you'd see in a property management call. We also spend quite a bit of time looking ahead. Because whatever happened, right? There's nothing we can do. But we also spend time looking ahead, what's coming up in the next 20 days, what's coming up in the next 30 days. So we manage those conversations very structurally as well. So some of you guys here, you sit into our contract to close calls, and you see how you run it. So this is how we manage our operations. This is how we teach, and this is how we take everybody to the structure, so that if there's a break in the process, we know what the break is, and we can go fix it. It was a lot. Don't worry about it. We'll talk more about it, and you'll hear it. Take a screenshot, and I would say go look at your process, build a team, and then you ask yourself, hey, if I do a first deal, or I'm trying to do a first deal, what kind of a relationship I'll get, versus if I hang out with the team, what relations they'll bring. Case in point, we're at the family office conference. There was a session today earlier. Everybody who came in, they had $1 billion portfolio. Each of them, like 4 or 5 people were there, and thing that talked about everybody bet on the team. Deal is later. Like one guy was talking about, and so he was the CEO of Keller Williams. He started the Keller Williams. So he was mentioning, look, if you get a good project, a great project, and you get a clunky team, it's done. Versus you got a really good team, give them a project, it's gonna come through on the other side, right? So build your team, that's your layout, and find your partners, do deals, don't be on the sideline. If you're an LP, start with the question, who's running the asset? and how much of a time they have available on a weekly basis are doing it. And what happens if that person gets sick for 6 months? You'll know the answer. If you're a GP, build a team who has been there, done that, and active, and who's just like you, a little bit ahead of you, and that's you. So you can build a pipeline about wisdom and the knowledge, and you, the grunt work, right, put together, and then you go be active about it. I'll stop here. It was a lot, so I appreciate you guys listening it out. So Trevor, back to you, buddy. Let me go from there.
Awesome. So thanks, everybody. You can scan this QR code to reach out to us. Next week, we're going to be doing some of our students with a testimonial. So if you can get a chance to join us. And one of the things with MASTA, we try to share the good, bad, and the ugly. So are we perfect? Absolutely not. Do we keep working hard and do we keep trying? Absolutely. So I'm just trying to read a question here.
Let me see what I have.
Not sure I understand the question. And I know
The
you're
last
on the
one?
phone, so it might be hard to see it.
What was the key of voice? Okay. Hey, Kara, so I'm going to reread the question. Let me make sure I understand. The question was invoicing to potential capital. Is it partnering when you haven't invested yet?
If you want to unmute yourself, Kara.
Yes, please.
And ask if you feel comfortable.
Yes, sorry for wording that kind of funny. I was just wondering, when you get on the phone with capital partners and say, this is your first deal that you're taking down and you're under contract, you can't really voice your past investments and how well they've done. And so in your first investment, when you were speaking with capital partners, what was like the key things to voice to still show your reputation in that you would be, doing what you're planning to do within your holding period, and kind of voicing to also kind of really show how accurate your projections are on it, as far as what the pro forma numbers are going to be when you haven't had a past investment, to show that what you say is actually what's going to happen.
Okay, I have a bunch of questions. I'll try to answer. If I miss it, please let me know. Okay, and again, I'll use our own personal experience as you go through, rather talking hypothetical, right? So, thank you, Rob. So he's exactly right, right? When we talk about, let's say, the best person to call a shot about the pro forma, or the best team who owns assets nearby, because every location got a subculture and a style. If and I'll give an example on my residential side, or my here, we bought more than 200 properties in the Houston area, residential land, whatever you call it. If someone comes up from California and say, I know Houston better than you are, Sharad, then it's an issue for our team because we played so much. So ideally, by design, the team should be, if you follow the principles, we should not go somewhere new and believe our cost is best unless we have raw data, hard data, actual performance data from somewhere else. So the first thing I would say, within your team, you refer that pro forma to another part of the team and a team who is designing the pro forma, right? If a new capital raiser comes in, makes an assumption, what's the validation of the assumption? I don't know. And then you say, look, I was hanging out with Joe, and Joe has XYZ assets nearby. We use those actual data to validate this pro forma. Hence, I believe the pro forma is right, and I checked it, right? So you build your team that way. And so your team's experience builds the confidence in pro forma. And then you come in and say, look, I am an XYZ professional. I get it. I understand it. I double check the process for you. So, and my success, recipe of my success was, and I'm just a number, project management and validation of the projects. I use that to make sure the pro forma numbers are right. Hence, even though I'm new, my project is solid. Come invest with me, right? That's how we build it. So rely on the team. And again, not the whole team, rely on the team who is the asset manager and where the data coming from. And then you apply yourself on top of that and showcasing your expertise on your previous life. Then you say, once you couple them together, even though I'm new, it's a very good deal. I hope that makes sense. I did it. Everybody did it. And the first time someone asked, why am I going to give you Pasadena? I said, this is exactly what I said. Look, man, I bought 200 properties. I know what a good deal looks like. Okay, Then second question, he's one of my good friends. He's still my good friend, but he's a very good analytical guy who invests. He's a good CEO, right? He goes, why will I give you money to Massive? Who are you guys? Like straight like this. I was like, look, let's forget about Massive. I've done any deal. If you look at resume to resume, all of us, we come from corporate. We have done one to corporate. We have done our diligent work. We work more than anybody else. So when we do a deal, we'll do the same. Even though it slips, we'll come back and pick it up, invest. And he did, right? On that pitch. So say what's right, say what you don't know, say what you do know, and you go see what happens. And trust me, people will appreciate more when you say you don't know, or I have a mitigation, but I don't know. That's why I have a mitigation. That will open up a door, much stronger relationship in future than anything else.
That's right. And if you don't know, go find out too.
That's right.
Yeah, say, I don't know. I can find out. I'll find out. So
Yes.
that's always great. Any other quick questions? We are going to do a breakout if anyone's interested in education. The main group can stay here. But it was something we wanted to try differently tonight. But any questions more about tonight's presentation? Awesome. So how do we get into the rooms, Jasmine?
So just raise your hand if you have questions about our coaching program. The breakout room is already set up, so I just need to send you to the breakout room. So if you're interested, just raise your hand and I'll start sending you to the breakout room. Okay, I'll see that there's some people here. Okay. All right, and everybody else, like, you can continue asking questions. This is the after party. I will start.
Jasmine, you might want to turn the video off and then open up for questions.
Okay.
Ask questions, guys. I mean, ask the most uncomfortable questions, right? That's rule number one, and see what happens. Thank you, Annabelle. Appreciate it.
All right. I'm trying to assign people, but I still see them.
Everyone's like, where do I click? That's what it is. Next webinar, I think will be fun one, right? We'll do some case study. We'll do more case study on underwriting from the folks who joined us, and we'll go from there. Man, we can't believe I saw a deal flow. We have 43 deals in the pipeline, and we underwrote so many. That was so cool, though. I should have the 500 deals. Man, I bet you money we missed 4 or 5 deals from there too that we just didn't know those are good deals. We have a white label CRM that we customized heavily using what we do. And if you go to mms.crm, I believe, you can see the customized version of it. It has built-in automation to it. And that is a proxy of ActiveCampaign. So we said, okay, hey, what if we want to get a customized version of ActiveCampaign for a very cheap price? What the best way to do it that has a lot more volume or throughput that I can do, right? Because as you know, oftentimes you'll hit a higher email count or something like that on automation. So we use, I think, a version like WordPress or high level. We customize that for us, and we are sharing with everybody. We do it. The reason we do it is because, the more we do, more we learn, more we find out. So if the more people are using with us, we are sharing with everybody. It works. And we have a tech team behind us. They do all the automation, or they do the templates early on for you. And last thing is it's $100, $150. You get a website and a CRM that has automation. Can't beat that price. So where do I do the
myself to the room, Jasmine? I can't find myself.
Oh, you want to go
You
there?
can't find yourself.
I'll send you.
Yeah,
Where is Mike?
I don't know.
Mike
He didn't. I
Kelly.
sent him there, but he didn't join.
Okay.
No, Shrar's there now. So
Okay.
awesome,
He's
awesome.
there. Okay.
Just don't want to leave him over there. So thanks everybody for joining us. As you guys all know, our buy box for multifamily is anything that makes money. How's that for a buy box? So we have to have boots on the ground in that market. We have to have local knowledge and experience, but we have bought everything from, we closed 18 doors in Denver, Colorado, 42 doors in North Carolina, 400 and something doors in Fort Worth, 204 doors we're closing in San Antonio. So we're all over on the buy box. So we really don't have one. We have one that makes sense, some that makes money. Again, we wouldn't go for make money where we didn't have good boots on the ground, where we couldn't have control. So it's very interesting, quite different from other people where they give you this specific buy box. We're not afraid of value add. We're not afraid of buying something that's nicer in a buy and hold. Any other questions?
I just put on the chat, Trevor, for people who are in Houston, we are having a Christmas sweater party next Tuesday.
Yeah, Jasmine and I are having a contest for the craziest sweaters. So for those of you that follow me on social media, you'll check out my abs with my Christmas sweater. So if you haven't followed me on social media, you're missing out. So
100%.
yeah, so KPIs we have looking for a deal. Our goal is that we can easily, without pushing conservative, produce more than a 17% IRR. And again, our goal is on an average of 5-year, double your money, which is what gives you the 17. We do have some development deals. They have a 20% IRR. So our Harris Ridge has a 20%. But we're looking for deals that definitely have some cash flow. Most of our deals don't cash flow till 9 to 18 months. We're looking to be able to easily give a 17+ IRR to our investors and a double your money in 5 years. Hopefully that answers your question.
Also, Trevor, I think it's important to remind people, if you are looking to use your retirement account, Harris Rich is a great deal for retirement accounts. And we are 85% subscribed, so we have a few spots. If you want to talk about it, be sure to book a call with us. Trevor, myself, Maria is on vacation this week, so don't book a call with her. But we are here. If you have questions, we'll be more than happy to help you on that side.
Yeah, Maria's hanging out with Mickey Mouse. Kind of funny too. So Maria is our biggest Mickey Mouse fan. She goes to Disney like 5 times a year. And they just announced near the property we just closed in North Carolina, they're going to open up some sort of Disney thing there. So she'll get to go to Disney and view the property. So that's pretty cool.
Yeah.
Awesome. Any other questions? Feel free to ask away. Yeah, so channels for the deals are definitely primary brokers, but we are definitely reaching out to owners. So our students spend a lot of time reaching out direct to owners. And then once people start seeing you buy deals in an area, they will reach out to you. But it is still primarily brokers. And we were talking earlier, right, about brokers. So I used to always say that, so a broker always gives their deals to the people, their A list, that they think they can close the deal first. Then they give it to the B list. Then they give it to the C list. And we're probably at a C right now, moving up to a B. And then they give it to the D list, and then they give it to me. So I always know if I've got a deal, it's been passed over by several people. Could be passed over though for reasons because it doesn't fit a buy box that they had. Some people only look at 100 doors and above. Some people only look at product that is 1980s or above. But our deal in Denver is in 1959. It's the oldest one we have, but immaculate property. Any other questions? Well, we appreciate everybody joining. I don't think we can close out because I will kick the people out in the other room too. So we can just sit here and chat.
Yeah, let's hang out here.
With things. So we're not looking for what I'm going to call deep value add. We're okay with value add. but we're not going to look for things that don't have like updated plumbing, updated electrical, updated breakers. So we're only looking at properties that already have those things taken care of. We're not at this time, and with this kind of risk in the marketplace, we're not looking to rewire a whole property, replumb a whole property. But we're okay with some things to be done, but it has to have that. And our goal is to always exit within 5 years, but let the market tell us when the best time is to exit. So we may get into some deals where we have a higher interest rate because we got in recently, and the rate may come down, but a refi may not make sense, but a sale would. And then most of our development deals are 3-year deals. So again, that's because we're buying a property, we're building it, and then we're getting out after it's up and leased. Great questions. Thank you. It's good to see you, Jennifer. I saw you with your boy in Santa Claus. Awesome.
Oh, there's another question on the chat. Do you exit deals earlier than
Oh,
5
I did that
years?
one. Yeah, so we
Oh,
will.
you did?
but-
Okay.
Yeah. A minimum unit count, again, we've normally, let's just talk about normally you need to have at least 75 to 100 doors to make a deal in a single market make sense. But we bought a deal in Dallas for 62 units, but it was next to another property that was 140 units that we owned, and we used the same property manager. So it really works that way for us to be able to do it. Our deal in Denver, it was only 18 units, and the other one we own is 12 units. And again, we were able to use the same property manager. They're less than 4 miles apart, so there was a lot of efficiencies and scale. The one that we closed in North Carolina, yes, we closed the first one earlier. It was a small one, but we closed it with a plan that we were looking for our next deal. So again, we have 2 deals. They're a little further apart there. They're close to an hour apart, but the lead partners do in the middle. And we've not done anything with grants or tax credits at this time. We have a mixture of existing financing. So the one that we're closing in San Antonio has a loan in place, and we were able to assume the loan and get a supplemental. We still haven't closed that. It's going to close in January. And then other projects, we have fixed debt on it. We never do variable debt ever. Variable debt is why we're going to have lots of buying opportunities next year when all of those timeframes come due or cap rates expire. And property managers, we really look for somebody that's an expert in the type of property we bought. So for example, in Denver, this is a property manager that's very good at running small properties. You wouldn't want to hire a property management company that's used to running 100 units and say, hey, you're doing such a good job, could you turn around and run my 18? They just don't have the expertise. And then in San Antonio, we went for an apartment operator or property management company, and they were mostly managing, they were anywhere from 150 to 400 units. And because we were at 200 unit, again, it fit into what is their wheelhouse. But you also, luckily, when we're in the market, we have a lot of friends that are in the market. So we ask them, who are they using, how happy they are. And at the end of the day, I've never heard anybody say they love their property manager company. A few do, and there's some good ones, but the people are going to be pretty honest talking about their property manager companies for sure. Some great questions. And again, if anybody ever wants to do a call with any of us in Massive Capital, I'll re-stick it in the chat again. You can click on this one here and you can pick a call with any person or any topic.
Yeah, we
Is
should
it
start
cold, Tracy, in
recording.
Calgary now?
Yes, I am. I'm just listening. My brain is